Hello and welcome to the CX Files podcast for October 6th, 2022. My name's Mark Hillary and I'm in Sao Paulo, Brazil.
Hey, Mark, it's Peter Ryan speaking. And usually, as you know, I'm in Montreal, but this week I am in the Philippines speaking at a conference. So greetings from the other side of the world, literally.
Nice. It's always a great place to be out there. I haven't been out there for a few years actually, but certainly I went there like year after year to some of the big. Was it BPAP? I think the organization out there. Yeah, that organizes the kind of Business Process Association of the Philippines. Yeah.
Very nice. Well, now it's IBPAP, so they put a letter I in front of it. But I'm here with a client. I am speaking at their client advisory board. Couldn't be happier than to be in the Philippines. For me, it's been a few years as well. The last time I came was supposed to be for a 5-day trip. Due to airline delays on the way out, with the weather that we face on the East Coast in the winter, it ended up being about maybe a 24 to 36 hour trip. I spent more time actually getting here than I did on the ground. It's great to be back, great to meet with my friends and colleagues who are based in the Philippines, and certainly more to come on this regard. It's definitely an industry in evolution, definitely an industry that has got a positive outlook, especially as we move into the coming calendar year, and looking forward to reporting more on what happens here in future CX podcasts.
Okay, excellent. I'm sure that we'll hear an update from the Philippines soon then. Well, let's look at this week. We're talking about fraud and how it applies to CX. And this comes out of a fraud conference that you attended in New York recently, wasn't it?
That's correct, Mark. I had the pleasure of attending a group Futurista conference on fraud management and fraud prevention in New York City. Now, the event itself was centered around the financial services space, but I found that all the presentations that were done really had a component that were very, very transferable to professionals in customer experience management. And I had the pleasure of having met one of the speakers, who is a gentleman by the name of Rick Collins. We're going to be hearing a little bit from today. Rick was talking a little bit about what organizations need to be looking out for in regards to potential attempts at fraud. He talked about what can be done as best practices in terms of limiting exposure to fraud from a technology standpoint, from a human standpoint. And I think as Rick went through his discussion in New York, and as our listeners will hear over the course of the podcast, they're going to come to grips with the fact that what he's talking about is not rocket science. It's a lot of common sense, but it's also, I think, from the CX perspective, there's a lot of elements here that managers need to be asking themselves, am I taking these steps? Are these things that I'm doing already? They might sound right, they might sound appropriate, but are we doing it? So really, I hope what our listeners will be able to take away, I hope what the audience is going to be able to come away from during my chat with Rick are going to be some ideas about what they might already be doing, what they might not be doing, but really what they should be doing to limit their exposures from the contact center's perspective in regards to fraud and exposure to fraudulent activities.
Yeah, and this is a problem that we see all the time. And, I've read that a lot of people in the United States just don't answer their phone anymore because they're just getting these robocalls endlessly. And a lot of them, claim to be from organizations such as, your cable company or your bank or your cell phone company. And I see this myself. I'm always contacted by email or on my phone. And personally, because I guess, I've read a lot about this, I will always or never click on anything and never respond directly. If I get a message from my bank that says, look, there's a problem, you're overdrawn or something, then I'll call up the bank or go onto the app and check and see, is that actually true? Whereas I think it's still very easily for people just to click these links in email, a phishing attack or on a text message. And yet the brands don't help themselves. I still get messages from my bank saying, do you want a new credit card? Click here to claim your new card, or my phone company saying, click here for a discount. And you're clicking on links and you don't really know where they're going.
And this is some of the elements that Rick discusses in our chat, something that really hit home for me when he was discussing about how you might have a situation where a financial services organization receives a spoofed email asking the bank to be able to wire some money or the brokerage firm to make some transfers of cash, and there might be one letter difference in the email, the legitimate email versus the spoofed email address. And I was thinking to myself, Mark, if you're an agent doing digital work in a financial services institution, you're probably dealing with dozens, if not hundreds of these interactions a day. How easy would it be to miss something like this if you weren't trained properly? And this is something that we talk about a little bit around the training that needs to be ongoing for individuals working across the vertical spectrum to make sure that they understand what to look for in terms of what to respond to, in terms of what not to respond to, in terms of logging email addresses that look to be spoofed to verify things. And it was a very lively discussion with Rick, and I'm sure that our audience is going to not only get a lot out of it, but find it, quite frankly, very interesting and entertaining too.
Okay, so let's go straight to this conversation about fraud and CX with Rick Collins.
Well, this week, the CX Files is really excited to catch up with Rick Collins, who is a senior vice president at Marsh USA. Now, Rick, you and I had the opportunity of meeting in New York recently, where we were both attending the group for Futurista event related to fraud prevention and fraud management, which I have to say was probably one of the most enlightening conferences I've been to in some time. And you were the opening speaker talking a little bit about what were some of the fraud related elements that organizations should be looking for. And we're really excited to have you on the podcast today. Thanks for taking some time to join us.
Thank you, Peter. My pleasure. I'm very honored to be here with you, and look forward to a chat with you about fraud and fraud management.
Well, I have to say, before we get into our discussion about fraud, you have a very colorful LinkedIn resume and resume posting. And I really have to ask you about probably the most important title on that, and that's BMOC. How did you manage to take that role on?
Well, it may have been self-applied, I'm not sure, or it was inferred by others that I should self-apply that title. But I was the go-to guy for everything that happened at St. Joseph's College. I was everything from Emile DeBeck in South Pacific to scoring the winning basket during a crucial game on the Golden Eagles basketball team. So I was called on to perform many duties while at St. Joseph's College. And I often joke that at the time, there seemed to be for some reason, there were a lot more ladies that were looking to attend St. Joseph's. So there weren't as many, young, willing, able-bodied males. This was back in 1980, I guess, or 81 thereabouts. And there was a newer school, and it hadn't become popular yet with the guys. I believe it is now. I've recently revisited it. But so I was called on to perform many functioning roles and important positions within. I was doing all the recruitment, the admissions. I was advertising. I posed on a tennis court. All sorts of poses I was put into, and I was on the bus driving around Manhattan in Penn Station. My picture was found, and it was a great time. I enjoyed it very much. Since then, I've been forgotten by most. So it was short-lived, but it was great. So that was kind of tongue-in-cheek when I put that on there. The BMOC. Some people may look at it and get offended. I don't know, but I just put it on there for me to chuckle at whenever I look at it. But
I thought it was great when I saw it, and we were chatting a bit about it yesterday. We were having our pregame chat before we recorded the podcast, and you brought up on my LinkedIn profile something that I forgot I'd put down in my elementary school, that I was on the dodgeball team, which was a bit of a tongue-in-cheek joke myself as a big fan of the movie I Am. So here we are, we're at the height of our careers talking a little bit about fraud. And Rick, I want to start the discussion off today by just by hearing from you a little bit about what you see from the perspective of the biggest threats around fraudulent activity in business today, and if I'm a contact center manager, or if I'm somebody running a CX operation, what should I be thinking about how fraud has evolved over the course of the past 10 years or so?
Well, fraud has definitely evolved, as I have as well, from being the BMOC to the small little cog in the wheel. But I see for financial industries, like all companies, fraud comes in a variety of forms. Sometimes the fraud can be covered under a fidelity or crime policy, while others may not. The future is now. Speaking a bit about, you had asked about the future of fraud. We continue to witness more and more financial transactions are done from start to finish electronically.
Mm-hmm.
And so with the prevalence of technology and electronic transactions, many insurance policies contain clauses that could pose coverage hurdles for those scenarios. And we're looking at language that needs to be reviewed and adjusted to account for modern transaction methods, and allowing for digital documentation of collateral, especially when that's all that exists. I was kind of holding off on this. I'd like to close with this a little bit, but I can say that technology has made the financial institution space easier, and it moves money faster and more simply than ever before. So if you'd like, I could get into some of the types of fraud and discuss just what is out there and what we're seeing.
I would love that. And I think that from the standpoint of our listenership, especially those that are supporting consumers in the financial services industry, that would be invaluable to get some of your insights around this.
Sure. Well, firstly, for today's conversation, I'm going to talk about the two most frequent types of losses we see. Internal fraud in the form of employee theft, and social engineering. Employee dishonesty, which is where the term fidelity comes from, is one of the most significant sources of fraud loss for companies, including financial institutions. Some examples are where a lot of these are also involve more than one person. There's collusion. So employees can collude within a company's vendors to inflate accounts payable and split the inflated amounts. Sometimes they collude with dishonest loss adjusters at an insurance company, say, for instance, and create fraudulent claims to pay. And they pay the claim proceeds to an account owned by the adjuster. And then I guess they divvy it up afterwards, but that's another form of collusion, but employee dishonesty. We've seen cases where a dishonest loan officer colludes with a borrower to obtain a loan that the borrower does not intend to pay back, and then shares in the proceeds. Another one you may have seen in the news, or it's not, I don't think it's a one-off case. I think this has occurred, whether it be a laptop or another piece of office equipment, or any other something that is a more expensive item, but a dishonest employee could steal laptops and to sell and then keep the proceeds. So this is a type of, these are all employee dishonesty fraud that occur, and companies need to be aware of. And we can talk a little bit as we move on about possibly, if you'd like, what can be done to defend against these. But another type, aside from the employee dishonesty, are fraudulent funds transfers and social engineering losses. And they've become a regular source of loss in the past decade, and they continue to occur regularly. I have some examples of those. Now, today, we see oftentimes a private banker could receive an email that appears to be from a high net worth client. The email instructs the banker to wire funds to an account at another institution. The banker goes ahead and wires the funds without really realizing that the email address was spoofed and contained an extra letter. Days pass before the client notices funds missing in the account, and it's too late to stop the transaction. Funds have moved from the first bank to a bank outside the country and can no longer be traced. This is often the case. This is often done outside of the country, making it more difficult to attach or gain access to those funds once they're gone. Even if they were found, there are illegal hurdles to cross to get this money back. I have a couple more examples if you have a moment.
Yeah, well, I love them, Mike, because this is really resonating, especially from the customer experience management standpoint, which I think we'll talk about in a little bit. But let's hear what the other examples might be.
Okay. An insurance company with a history of making acquisitions and with many operations outside the US. Someone in the Treasury Department receives a call from a person purporting to be the GM of the Southeast Asia region. The fake GM says he needs a large sum of money wired to an account in Hong Kong immediately, and that an email from the law firm working on the transaction will follow. Well, this seems kind of ordinary, but the Treasury employee receives the expected email and makes a series of payments to the requested Hong Kong bank account. Several days later, someone notices that the funds have been sent and questions why. It's too late to recover all but a small portion. In another example, a hedge fund manager receives email instructions purporting to be from a pension plan fund. The email instructs the hedge fund manager to cash out of certain investments and send the proceeds to a bank account that is not their typical financial institution. Well, that is kind of a red flag right there. But in a daily activity, if you're not constantly vigilant and aware, you may miss this. And in this case, the hedge fund manager fails to notice that the email is a spoof. He makes the divestitures and sends the money to the outside. He sends it to the financial institution. The loss is discovered and funds are not recoverable. And then finally, I've got another example of an accounts payable manager receiving an invoice purporting to be from the company's office supply company, which is where the company sources things like printer toner, paper goods, etc. The invoice notes that for this payment and those going forward, the company should remit payment to a new bank account. Accounts payable adjusts the information in their systems and makes the next couple of months of payments to the new account. Before hearing from the office supply company, they're in arrears on their bills. At this point, the accounts payable department realizes their mistake and attempts to recover funds. And once again, depending on where those funds are and how they've been transferred, may make it more or less difficult to recover them. So these types of fraud have evolved over the years, Peter, and they're becoming more and more technologically savvy, harder to spot. One missing letter in an email is all it takes. And something like this may not be so easy to pick up. And it can be disastrous for a firm. So from an insurance standpoint, we're always looking to recommend that companies take precautions so that this never occurs and they don't even ever have to make a claim on an insurance policy, because insurance does address these concerns, and these exposures are addressed and covered by many, most, or some insurances, depending on what you have, what you buy, what's available to your company, all of these factors. But an insurance company will always help, or an insurance broker like myself at Marsh will always help a company learn how to avoid these risks, from occurring, how to keep them from happening in the first place. So prevention is worth a pound of cure is the adage that applies here, that if we keep these things from occurring, these fraudulent acts that actually are successful by the perpetrator, we can then avoid the claim. And avoiding the claim is the first, is the way you want, is the first thing that you would prefer rather than making the claim.
Okay, so prevention is really important. And you raised a number of things in what you were just saying that really resonated with me. I have to say, the issue about the spoofing the email addresses, I'm just thinking to myself as somebody working in the CX industry, imagine an agent in a financial services operation who receives a spoofed email asking for activity to be done, transferring monies out of an account to somewhere else, and so forth. And as you say, it can be the difference of literally one number or one letter in the email address. And we're talking agents in some cases will be dealing with hundreds of interactions a day. There's a huge amount of risk when we think about these types of electronic threats, or as you mentioned earlier, the human threats. So I want to talk about prevention. In your view, Rick, what are some of the key preventative measures that an organization can do to try and prevent these types of activities from happening?
What we found to be most successful, Peter, is to implement a strong internal audit function that looks at all aspects of the business and constantly or continuously tests for irregular transactions on a set schedule. So there are many things that can be done to create this and have it up and running. Firstly, to implement segregation of duties such that no one transaction can be completed from start to finish by the same person. For example, the initiator of a payment cannot authorize it or execute it. We can also create tiered authority for funds transfers, claim payments, and capital expenditures. We can ensure employees only have access to the systems they need for their job functions and review the access provided regularly. So these are some of the things that work very well against the employee dishonesty and employee theft. Those work very well. Speaking to the fraudulent funds transfer and social engineering losses, we've got a different set of safeguards in this case. And they're just as important, but they perform a little bit of a different function. And one thing to do is to make sure all requests for money to leave the company are verified through an out-of-band verification method. So if a person gets a request via phone call, they should email the requester at a known email address to verify the caller is who they said they were. The same thing with email requests. The person receiving it should then call a telephone number on file, not from the email signature, but one that is on file previous to the email to make sure the request is legitimate. Also, as many companies do, but if you're not doing this, you should be immediately, have two sets of eyes on funds transfers. If person A gets the request, they should be required to get approval from person B before sending out funds. This makes perfect sense. It's not always thought of. It's not always in the protocol, but it should be. Lastly, but additionally, you need to check email addresses carefully. And the constant vigilance can be exhausting, tiring, arduous, all those things come to mind. But spoofed emails are very common. An L instead of an I, a 1 instead of an I, a 0 instead of an O, etc. These things can mean a great difference. And therefore, you've got to be constantly on guard. Being suspicious of any requests to send money to a new bank account, not already on file for a customer, especially if the accounts are outside the US. And lastly, here's the last thing that I'll say on this, and there are others, but these are some of the most important that I've touched on, hopefully. But where possible, require a multi-factor authentication, for example, a phone PIN and a security question, or a password and a token. So these are some of the things that companies can do in order to head this off at the pass and keep this from ever occurring before making that claim, like we talked about. And you know, it's reassuring to know that you have an integral insurance program that does speak to these problems and these examples of employee theft and fraud that occur and are occurring more and more frequently. So you can sleep well at night knowing that you have the right policies in place. And for a plug, I'm always glad to help people look these over. I'm more than happy to help you make sure that your program has the integrity that you need. But also, once you have that security and peace of mind, you still need to be vigilant.
So I want to finish off our discussion today by talking about the human factor that you went into a little while ago. One of the things that I've talked to many of my clients about, and many stakeholders in the CX industry, has been the issue about prevention at the point of recruitment. Rick, could you talk a little bit about what you see as some of the best practices around recruitment that companies should be thinking about to prevent individuals who could be bad actors or threat actors from coming in and undertaking fraudulent activities?
Well, I'm a firm believer in the fact that, well, first of all, I believe in forgiveness, and everyone deserves 1, 2, 3, not just a second chance, many chances. I do believe that. So, but in this case, when you're looking at someone who's going to be bonded or be in a position where fidelity and other aspects come into play, a history is important. And unfortunately, the business of insurance is looking in the rearview mirror in many aspects to look at the past and how we can prevent things from happening by looking at the way they occurred in the past. And so, therefore, we take what's going on today and we learn from each time that someone attempts something successfully or unsuccessfully. We learn, but I can't stress enough in the hiring practice to really look at the background of the individual that is being hired. And to that degree or extent, many companies, such as Marsh in particular, we use a background check. We check both criminal records and we look at a person's background to see what they've been doing in the past. One of the first things that we look for, and myself, I could not claim to be an angel of any sort. But there is one thing that I can claim, and that is I like to keep my word. I like to say I'm a man of my word, and I'm transparent and honest as large a degree as I can be. So when filling out an application, what's most important to look at from a future prospective employee is whether or not they're transparent. So if they have done something that is a little slightly unsavory, or they do have something on their background that's going to appear in a background check, it's good that they make you aware of that prior to the hiring process or sometime during the hiring process, so that when you do, and it's very prudent to run that background check, of course, like we said, not only just if they say they've worked where they say they've worked, or that they went to the school that they say they went to, all those things are very important. But that if they did, say, for instance, they were 22 years old, a little less prudent decision-making than they should have been at the time. They were young, say, for instance, got a DWI or a DUI, whatever your locality calls it. And before the background check is run, they say, well, I need to let you know that this happened. Here are the reasons why. This is how it happened. And then they've come clean. They've mentioned it. Now, when you find it on the background check, it's more acceptable than if you didn't know it was there. So these are things that are very important. I think transparency, and to expect that honesty from an employee can often preclude some of their poor behavior or poor past behavior if they're honest and upfront. So in hiring people with great responsibility and the ability to commit fraud, it's very important to look at their background and to have assistance through companies that are specifically purposed and designed to look at backgrounds and can do an exhaustive check and really dig into it. But once again, the last thing I want to leave you with is that on this particular topic is that nobody should be, anybody who actually comes clean and says what happened should not be penalized to a large extent. If you know about it, consider it, and still decide that you'd like to hire this person. That's often a case where that can occur as well.
Well, I think you're touching on something that's very important. Transparency is key, and being upfront about perhaps poor lapses of judgment or things that might have happened in the past is a much better policy than trying to hide them or to cover them up.
Exactly. And like I say, I think companies are not expecting it. If someone's record is actually, how can I say, we're all human, and growing up is a difficult challenge. And looking back, I wouldn't change a thing, but I can see in my own life that being the BMOC was a little more meaningful to me back then. If I'd been back in school now, I'd be a different person, as we all are, as we evolve. So as we evolve as people, it's important to evolve as a company to be able to be on the lookout for fraud and how to spot it, have all the employees aware of it, nip it in the bud, keep it from occurring. And then I'd be remiss if I didn't say one last time that I'm always an open ear to listen to anybody speak to me about insurance and how if something fails, if some of these protections fail, that there is insurance to cover you for that in the case of a loss.
Rick Collins, great to catch up with you. Thank you for what I think has been some amazing best practice tips in terms of how organizations can try and not just deal with fraud, but prevent it. It's been a pleasure, and we hope to have you back on the CX Files soon.
Thanks for listening to the CX Files podcast. We really appreciate your feedback and suggestions. You can reach myself, Mark Hillary, or Peter Ryan via LinkedIn. Please also leave a rating or review on your favorite podcast provider, as that helps more people to find us. As always, we'd like to thank Chris Haig at Traction Media for the CX Files graphics. See you next week.